In this session, we will be learning about return on capital employed or return on investments. Okay, so it is also one type of profitability ratio. Now, profitability ratio measures the profitability or the operational efficiency of the firm. Okay, this ratio reflects the final results of the business operation. The results of the firm can be evaluated in terms of earnings with reference to a given level of assets, okay, or sales or owner's interest. Okay, therefore profitability ratios can be classified into three types. One is profitability ratio required for the analysis from the owner's point of view. Next is profitability ratios based on assets or investments, and third one is profitability ratio based on sales of the firm. So this ratio, return on capital employed or return on investments, is the profitability ratio, okay, based on assets or investments. Okay, right, now let us understand what is a return on capital employed ratio. So return on capital employed is equal to return upon capital employed into 100. We are calculating it in terms of percentage, so into 100. Now let's see what is return. Okay, so what does return means? Return means your net profit, okay, plus or minus non-trading adjustments. Okay, so adjustments which are not related to business, any income or expenses that are not related to the business, okay, that are included, that are either added or reduced from your net profit. Okay, but one thing, it does not include any accrual adjustments for amortization of preliminary expenses or the goodwill. Okay, so whenever you are writing off any preliminary expenses or goodwill, all those adjustments need not be done here. Okay, then add interest on long-term debts, then you have to add provision for tax, okay, then less interest or dividend from non-trade investment. So whatever is the interest or dividend that is received from non-trade investment, we have to reduce it. Okay, since we have to find out return from the business. Okay, so non-trading investments in the sense the investment that are not kept for the business purpose. Okay, there is some additional funds which are kept for the purpose of capital gain or either earning interest or dividend from that. Okay, it is not kept for the purpose of business. For example, your funds in the subsidiary, that is investment in subsidiary or joint venture, will be your trade investment. Okay, now capital employed. Okay, let's see what all is included in capital employed. Your capital employed, okay, is equal to your equity share capital plus reserves and surplus plus your preference share capital plus your debentures plus your other long-term loans, okay, minus your miscellaneous expenses and losses. Okay, this is fictitious asset which are appearing in the balance sheet. Okay, miscellaneous expenses or losses to the extent which are not written off, minus non-trade investment. Okay, so we are excluding non-trade investments from this. Okay, so this is how we calculate capital employed. Now we will see one example and calculate return on the capital employed. So given below is a profit and loss account of Sevak Limited. Profit and loss account for the year ended 31st March 2017. On the credit side we have sales and closing stock. Okay, so sales is 12 crores, closing stock is 75 lakhs, so total is 12 crores 75 lakhs. Then on debit side we have opening stock 50 lakhs, raw material consumed 4 crores, wages and salaries 2 crores, manufacturing expenses 1 crore 50 lakh, gross profit 4 crore 4 crore 75 lakhs. Okay, then in profit and loss account we have by gross profit 4 crore 75 lakhs, which is carried down. Then miscellaneous income is 50,000. By profit on sale of investments is 50,000. Then interest and dividends from investment is 1 lakh. So the total of the credit side is 4 crore 77 lakh. Then on the debit side of profit and loss we have salaries 50 lakhs, stationery 2 lakh, printing and advertisement 4 lakh, postage and telephone 50,000, electricity 50,000, selling and distribution 1 lakh, interest 90 lakhs. So net profit comes to 3 crore 29 lakhs. Okay, then we have balance sheet. In balance sheet we have assets side and liabilities side. So on liabilities side we have share capital 4 crores, reserves and surplus 1 crore, 10% debentures 9 crores, current liabilities and provision 2 crores. So total is 16 crores. Now total of assets, fixed assets less depreciation, that is a net block of fixed assets, that is 8 crores. Then investment, we have trade investment 2 crores and others is non-trade investment 2 crores. Okay, current assets, loans and advances 3 crores, preliminary expenses 1 crore. Okay, now we have to find return on capital employed. So first we will calculate capital employed. Okay, so return on capital employed is return divided by capital employed into 100, right? So first we will calculate capital employed. Okay, so what is the formula for capital employed? Let's see it here. Is equal to equity share capital plus reserves and surplus plus preference share capital plus debentures plus other long-term loans less miscellaneous expenses and losses less your non-trade investment. Okay, now so let's see the balance sheet and prepare a capital employed. So capital employed is equal to, what is your share capital? 4 crores, right? Share capital. Then add reserves and surplus. How much is that? 1 crore, right? Then your long-term loans and debentures, so 10% debentures, how much is that? 9 crores. Okay, and then what we have to reduce it? We have to reduce your fictitious assets and your non-trade investment. So fictitious asset we have preliminary expenses. How much is the preliminary expenses? 1 crore. Okay, and then non-trade investment. How much is a non-trade investment? See here, trade investment is 2 crore. This others is nothing but non-trade investments, right? How much is that? 2 crores. So your capital employed comes to 11 crores. Okay, now we will calculate how much is the return. Okay, so what is the formula for return? Return is net profit plus non-trading adjustments plus interest on long-term debts plus provision for tax less interest and dividend from non-trade investment. Okay, now let's see our profit and loss account one by one. We have to start with the net profit. Okay, so net profit is 3 crores 29 lakhs. So I will just put a net profit first. return, calculation of return in that net profit. How much is the net profit? 3 crores 29 lakhs, right? Then now we'll see the credit side of profit and loss account first. Okay, what all it has? It has by sales, okay, by closing stock, okay, then by gross profit, okay, by miscellaneous income. Now this miscellaneous income we need to reduce it, okay, since it's a non-operating income. So less miscellaneous income, 50,000. Income, how much is that? 50,000. Okay, then next, by profit on sale of investment, again it's a non-operating income, so we have to reduce it. So less profit on sale of investment, how much is that? 50,000. We have to reduce that. Then interest and dividend from investment is 1 lakh. Now total interest and dividend from investments is 1 lakh. Okay, your total investments is, trade investment is 2 crore, other non-trade investment is 2 crores. Now they have not bifurcated this investments as trade investments and non-trade investment, interest and dividend. So what will we assume is that since the investments is 2 crores and 2 crores, this 1 lakh interest and dividend received from the investment, this 50,000 is from trade investment and 50,000 is from non-trade investment. This is what we are assuming, okay, since nothing is specified. Now 50,000 interest and dividend from non-trade investments, we have to reduce it, right? So less interest and dividend from non-trade investments, how much is that? 50,000. Okay, now we'll see the debit side. Okay, now the debit side. Debit side, you have opening stock is fine, raw material consumed is okay, wages and salaries, manufacturing expenses, okay, all these are okay. Then salaries, then stationery, printing, advertisement, postage and telephone, to electricity, to selling and distribution is okay. To interest, now interest is on your debentures. See, you can see 9 crores debenture and interest is 90 lakhs, so 10% is the interest. Okay, now you have to add interest on long-term debts, right? If you see the formula, so we will add back those interest. So that comes to add interest on debentures. How much is that? 90 lakh, right? So your return is 417. It's 4 crore 17 lakh 50,000. Now we'll calculate return on capital employed. Okay, return on capital employed is equal to your return upon capital employed into 100. So that comes to 417. 50,000 divide by, what is your capital employed? 11 crores. Into 100. Okay, so that comes to 37.95%. Okay, This is how you calculate your return on capital employed. The return on capital employed is 37.95%, which is high, right? So you are earning around 37.95% of your capital employed. So this was about return on capital employed. Thank you.